Hey, good evening, guys. Hope you're doing well. It is Sunday, a lovely Sunday evening. It is January the 27th, 5 p.m. Central Standard Time, about 5:05. You know how we get started here, guys. A little late to the party and early to leave before everybody's piling into their cars when they should be giving up their keys. Anyways, hope you guys are doing fantastic on this evening. Really haven't done a whole lot today. Just a kind of a normal day, guys. I want to thank everybody. I want to thank all the recent subscribers, all the recent followers on Twitch as well. Thank you so much for the support. Of course, sorry, I got to start doing the regular introduction so that people are familiar, especially if this is your first time. My name is Justin Wise. I'm the lead analyst and senior mentor at cryptocurrency.com. You guys can find all the information in the description down below if you're interested more in what we do. And we're here every day to analyze the market. So I've lost my chat feed, so give me one quick sec to refresh and pull that up. All right, cool. Everything looks good. Let me pop this chat out. All right. Hey, Myth, what's going on? Mohammed, Cannon Man, good to see you. Edward Park, Devin Young, Quinn Barry, and Rick Schmitz. Jurgen Ernst, hey, it's been a few days. I saw you yesterday. Glad to see you this evening. Hope you're doing well, man. All right, guys, let's go ahead and start off as we normally do. Let's go right over to the markets. And there we go. Of course, as usual, guys, if this is your first time to the channel, if you want to support us, make sure you hit that subscribe button and the thumbs up. We really appreciate that so that you don't miss an episode, because we are here every day. We're going to start doing evening shows during the weekend. We're experimenting with this format. And honestly, I quite like it. It's much better. So the weekly candle is going to close in about, 52 minutes. We're going to have a new weekly candle printed right here, right in this area. All right, new weekly starting on the 28th. So what have we seen the last 2 weeks, guys? Well, a lot of you probably should not be trading Bitcoin or Ethereum. Honestly, just the absolute worst time to be trading. Moving into consolidation and looking at what we've seen for the price range, we've seen volatile wicks to the upside and the upside and the downside. I mean, just a wicked Darth Maul weekly candle. And this is just very classical, very typical of what you will see in consolidation with price contraction. Remember, now 14 days of extreme price contraction. The expansion that follows is often quite volatile. And again, if I had to put my money on where I'm looking at for Bitcoin right now, I would expect a volatile move down to liquidity, touching these support areas that we have talked about in the show at length. And I would expect to receive an optimum entry right here below the previous yearly low. The reason for that is multifold. The reason for that is because of the pooled liquidity at this area. And this is just very classical of what you'll see when you've established a trading range before you bounce back up to the trading range. I think that most people, if Bitcoin goes below the yearly low, their psychology is going to be to short sell into that market. The psychology of retail traders is also going to be exiting their long positions at that area, because most individuals will be putting on trades in this area. Now, there is a good reason for that, and I will show you why. And this is scenario number 2. So the primary, let me restate that, the primary scenario that I'm looking for, the best risk to reward trade, in my opinion, is to be looking for a long entry down in this position. Now, how are we going to catch that? How could you catch that? You're going to have to be looking at several factors. Now, if you want to be a more conservative trader, what you're going to be watching for is the daily time frame. You're going to see an intraday time frame wick down into that area, and most likely a violent movement back up. You'll probably see, ideally, a hammer candle, or at the very least, something like a dragonfly doji, which is a little stronger than a hammer candle, honestly. But I digress. So that's what I would expect to see. And you're waiting for the next daily candle to print above that level. So that is your conservative entry that we have found bottom in there. Now, you will not be getting as an attractive price. However, you will be paying a premium in price, but paying a discount on anxiety and stress for when you're looking at when you want to enter the market. Now, why does price want to go directly below where our lows are? Well, there's a lot of liquidity in that area. Hopefully, I've explained that well. As I said, in this type of market, you're going to have lots of long stops. So every individual that is going to be buying in this area, and there's not a bad, that's not, again, we'll get into scenario 2 here in a second, but the primary scenario that I'm looking for the best risk to reward ratio is, again, an intraday stab down below yearly lows, and then a fairly violent movement back up. Now, I'm not saying a V bottom, okay? I cannot predict the volatility of the movement back to resistance. I can't tell you that, nor can I tell you that assuredly we will break resistance on the second go through on the weekly time frame. Hey, Jasper Sastry, thank you so much for joining us. Thanks for the sub on YouTube. But what I can say is that the highest probability setup that I do see is that violent stab down to tap into liquidity and then move back up into resistance. Again, we have established, if we look at my chart, I have established my weekly time frame resistance and my weekly time frame supports. And those are based on a couple of different metrics. Obviously, the primary area that I'm looking for is the weekly equilibrium candle. Now, what that is, what the weekly equilibrium candle is this weekly candle right here. As I've explained many times, we have a dominant market cycle right here. Let's go back to the weekly time frame. So we can see this descending triangle pattern that we traded into for the majority of 2018. We have consistent supply, we have a consistent demand zone, and then we have diminishing supply, meaning that the strength was to the bears and they were increasing their strength as price descended throughout 2018. There was no reason to be bullish at this area. The most likely scenario, now, could we have gone up from here? Absolutely. There were many factors, there can be many factors as to why a market will behave counter trend. However, when you see a good setup like this, when you see a nice slow ladder stepping down of highs, so you have descending highs, so you have lower highs, and you have consistent support. It's a classic descending triangle pattern, but understanding the pattern is not sufficient, and understanding the psychology of why did that pattern play out, or what are the market dynamics that allowed that pattern to play out. The market dynamics that allowed that pattern to play out are the fact that sellers were willing to sell at lower prices, whereas we were not getting buyers that were willing to buy at higher prices. It's quite simple when you just look at the markets in terms of supply and demand and the strength of who has the dominance, the sellers or the buyers. So as we can see, when a market is strongly trending up, you can see that we have buyers that are willing to buy an asset at a higher price. Now this indicates strength to the bulls, strength to the buy side. And when we see that sellers are willing to sell at lower prices and conversely buyers are unwilling to buy at higher prices. Otherwise, if buyers were willing to buy at higher prices, then price would go up. If buyers are willing to buy at a higher price, price will go up if there is a sufficient amount of buyers. But unfortunately, we did not see that all of 2018. We saw the increasing strength of supply as supply came closer to demand, and then you get strong price contraction. You get strong price contraction for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. You get price contraction for 9 weeks, and then eventually, inevitably, the highest statistical likelihood is the break to the downside. Now, we broke through a lot of supports on the way down too as well. We had that logarithmic trend line from 2015. We broke through the 200 exponential, and we broke through a bunch of other stuff as well. But the 200 exponential is the important one to me. And now we found support on the 200 simple moving average. We also, if we do take a wider term view of things as well, we're also trading back in this slight consolidation period. And now, again, it's not strong consolidation because it was a parabolic movement upwards. But we can see overall, it is an HVN on the volume profile as opposed to the LVN that we traded directly through. And as I've said before, when you look at the volume profile in this way, when you just look at what is the volume profile trying to tell you, we can see that between this area and this area, there is not a lot of interest in trading. All right, because price was not interested in hanging out in this area. This is an LVN, it's a low volume node. It acts as a train track to the train that is Bitcoin. Whereas HVNs act as train stations, and this is an area where price is very interested in hanging out. And that's what we got. We saw price move through an LVN very quickly on high momentum, stall out at a key support level, the 200 simple moving average in this case, although in the proximity of the 200 exponential, and in this proximity of previous slight consolidation and high volume trading, this HVN. This was a likely place for price to turn around. Where is our next HVN should this level break? Well, it's going to be down here between 2200 and 2700 is where we're also going to stop moving on high momentum. Now, I do expect that these levels will hold. Again, I generally do not see a break of a trend on the second pass through, so this would be a secondary test of our support trend line right here. And we also still have that confluence with the 200 simple. Now, should we open and close a weekly below this level, then we can look for that high volatile movement downwards. But the intraday wick, which is what's going to get everybody excited about, the intraday wick down below this level is generally the best time to be buying when you are looking at breaking new lows on a support range. All right, so let's talk about the resistance level right here. We have this equilibrium weekly candle right here. So what this signifies is that we have a strong dominant downtrend, and then the market stalls out. And at this level, at this price level, the open and close of this candle, the bull sense weakness in the bears. Demand senses weakness in supply. And so what happens naturally after we bottom, after we find support on our 200 simple, we come back up to test that level. And we consolidate at that higher level for a while. And what were the indications to be selling at that level? Well, a good indication is to look at sentiment. So let's actually pull open. So here's the monthly. Here's the monthly bull bear income, and I'm getting this information from Bitger. And one thing that's interesting to point out is that when positions are very profitable, that's often when they reverse. So we're looking at market sentiment here. So as we can see here, when Bitcoin's price did make it up to that $4,000 area and consolidated here for a while. Hey, thanks so much for the sub, Web Surfer. Sorry, I have to go to my, Web Surfer 001. Thanks so much for the follow on Twitch, man. I highly appreciate that. Oh, hopefully you guys can see this. Okay, good. You can see the bull bear income. Great. I didn't have to flip my scene. As we can see that when Bitcoin is at $4,000, this chart, this area of the chart right here represents the profitability of long positions. And as we can see, throughout this entire consolidation area at the top, where we really have little volatility, the bulls were in quite good profit. We have a lot of long positions in profit. And then what happens? The market reverses. Conversely, if we look over here, if we look at spikes down here on the bottom, now this is measuring profitable short positions. So as we can see here at the bottom, or at the recent bottom at 3,600 before price spiked back up to 4,000, we had a big increase in bear income. So a lot of shorts being very profitable, and what happens? The market reverses. Here again, we find another local bottom. Look how profitable these shorts are in this area right here. Price reverses. And right here, we have a big spike in bear income, and what happens? Price reverses. And then the longs become profitable, and what happens? Price reverses. And what do we see now? We don't see any clear indications looking at sentiment data to be taking any to be putting any positions on. We have both longs and shorts are overall unprofitable. Why? Because retailers are longing tops and shorting the bottoms, as they will do in a very contracted, low volatile price range. Unfortunately, a lot of people don't realize when the market is good to be when it is good to be in a position, and when it is best to just be out of the market and be in cash. Or alternatively, if you don't want to take your funds off a platform like BitMEX, for example, to just be at a 1x short, which is the safest hedge. And why is this? Well, what is the psychology behind this? Well, Bennett has a great video on this, but just to touch on that for those of you who haven't seen that video, it's because if you're in a profitable position, the psychology of most traders is to take profit because you're unsure of which way the market's going to go. And most traders have terrible money management skills. So they're looking to take profits. And what are positions in unprofitable situations likely to do? They're likely to add to their position, which is the worst thing. All right, let's see, back to what I was saying. And what is the psychology of unprofitable positions? Well, they're likely to add to their position, which is, in my experience, the worst thing that you could possibly do. Laddering into a losing position terrifies me, like literally terrifies me. I know that it is common knowledge that's been applied to people. And there are many situations where I will move into a situation, especially if I'm looking to catch a wick, where I will do a laddered buy setup, but I have a plan to do that. See, if I'm in a losing position, if I've entered my position size and I enter my position size based off the distance to my stop loss, allows me to calculate that if I lose the trade, I lose my R, which is the acceptable risk limit of the percentage of my portfolio that I'm willing to risk per trade, that I'm willing to lose per trade. Now, if price comes close to my stop, I don't think to myself, well, price could go back up. No, I let my stop hit because that's the fee that I pay to take good setups, okay? And all good setups do not result in profits. However, if you modify your position based on emotion, if you do not follow your strategy, if you do not follow your plan, you have several problems. First off, you're likely to make the worst decisions because what is easy to do, what seems easy to do in the markets is generally the worst thing that you could do in retrospective. Secondly, since you're not following your strategy, And since in trading, you want to produce consistent results so that you can back test your strategy and verify, are you profitable, net profitable overall? Is your strategy profitable? Or is your strategy unprofitable? And it takes time and discipline to actually get results that will be able to tell you whether or not your strategy is profitable. Nothing's wrong. Maybe you can improve on it, but again, you need to improve on it in a consistent manner that you can back test. And so when you start making emotional modifications to particular trades based off how you feel at the time, first off, it's generally going to be the wrong thing to do. And secondly, you're going to get varying results because you've done different things each trade. And so now you do not have consistent data to back test so that you can look at your past trade history. You can look at your trade journal in a calm, objective manner and decide, okay, is my strategy overall profitable or not? Do I have an edge in the market? If you do not have an edge in the market, if you take a 6-month view of your trading and you are net unprofitable, there is probably something wrong with your trading strategy. If you take a 1-week cut of your strategy, you really can't tell. You really do need to play this out. At least a month. I recommend 3 to 6 months to trade it to trade a strategy, and that's why. If you're not sure about your profitability of your strategy, you need to first back test it into the past, and then you need to test it. You need to future test it. You need to current test it, and the only way that you can do that safely is to paper trade. So it takes caution and patience overall to be able to develop a winning, profitable strategy. All right. Let's go back to Bitcoin real quick. Okay, so weekly time frame. Let's talk about possible support levels right here. Bitcoin did wick down and test the first level of support that I saw right here, 33.90. We do have that 200 simple coming in right just about in the middle of these two support levels right here. And all I'm using for support levels are HVNs. If we actually go down to the 24-hour chart, oh, you wicked woman, you. Let's get rid of volume because that's going to be largely distracting for our purposes right here. All right, so let's go down to the daily time frame. Excellent, great. If we go down to the daily time frame, we can see that I am simply targeting previous areas of high price traded at these levels, so high volume nodes. Fusek, because I am not going to attempt to mess with that first name. Thanks so much for the sub on YouTube. And I don't listen. I know that I say that. That wasn't meant as an insult that I don't like your name. No, I generally accept my ignorance in languages. That I'm not going to slaughter your name live on the stream. Thank you for the support. So we can see that these are key areas of consolidation. Again, one thing that I want to talk about, because I talk about the volume profile a lot, I don't want to get super distracted from my train of thought, but what makes high volume nodes on the volume profile? Well, what makes high volume nodes is identifying a price level, a horizontal level, where there has been a lot of activity, buying and selling. And so two things can create a high volume node. And that can be an extreme volatile movement through an area. And it can also be a long drawn out period of consolidation. 401 crypto, thanks so much for the sub. So it's kind of like you have your what's the words I'm looking for here? High volume nodes can be created through very violent and high volatility movements through an area because there was a lot of buyers, maybe a lot of retail traders bought into a breakout. You can have something like a blow off top or a breakdown blowout, which is generally the best time to be buying or selling. Sometimes some people call these power moves. I don't really like using common terms. I like to come up with my own unique terms for stuff. Keeps me special. But the idea is that if you see a very, very volatile move on high volume at the top of an uptrend, it's probably the best place to be selling because the buyers have likely exhausted their capital and you're likely to get a significant movement back down. The same thing when you're looking at a resistance level. And I know that, again, it's a meme now. One of the things that I'm common to say, is short resistance and long support. But it's not always that simple because you do have to look at price action analysis. Are you approaching, Jesus, I got my phone blowing up. Are you approaching Are you approaching support on low volatility? Generally, that means that you could possibly, or excuse me, are you approaching support on high volatility? Are you experiencing like a big, violent, sharp stab down to support? Generally, a good time to buy support. Okay. Is price just drifting very lazily down, forming lower lows and lower highs down towards support? Probably an area where you're going to see a breakdown. So looking for confirmation to short that breakdown. Why? Because high volatile moves down are generally irrational areas of the market where sellers are exhausting all their capital. But when you see a very slow, lazy drift down to support, probably not the best area that you want to be going long from until you actually get confirmation, until you get a nice bullish candle on good volume off of that support level. Why? Because then you've established that you do have a bottom. But if I see a very low, lazy drift down to a support level, I don't just take buys. But if I see a violent stab down to support, I generally market buy. So hopefully that's clear. All right. The current thing that I'm looking at doing is I'm going to be taking a speculative long on Bitcoin, and if and when we get down to, if we get down to this area in between 33.90 and 32.39, I'm gonna set some buys right here, and I'm gonna wait for the reaction. I'm gonna play that with a fairly tight stop, and actually, as we come closer to that level, I don't exactly have the areas that I want to put price at. I mean, obviously my analysis tells me to set buys at 33.90 and 32.93, but I don't really want to do that. We do have two HVNs coming in right here, and we also have that 200 simple, and I do expect that to be respected. But, you know, and I'll be honest with you, I haven't exactly, how do I put this? I want to see what price action does before I start putting on trades. So if I see some indication that we're likely to bottom, that we get a high volatile move down, then I'll probably be doing some market buying if we violently stab down from here. But if we lazily drift down toward this area, as I said, then I'm going to wait for the violent stab down here below local lows, or excuse me, below the range low. The risk to reward is just much higher in my analysis for that trade. So it depends on the manner in which we descend to these levels. So I misspoke when I said I was going to be placing limit orders here, because I just don't think that's what I'm going to do. My analysis can change. The actual way that I'm going to play this out might change, but for right now it hasn't. This is basically the idea that I've had for the last 2 weeks. So I'm putting on no trades in this consolidation period. And overall, as I talked about earlier, I've kind of deleted some of those lines. 36.40 and 35.50 is really what I was watching for this range to break. I've redone a little bit of this because I think it's going to be fairly obvious. The first, if we get a nice volatile move to the upside, I will not be putting on a long. I'm not going to be putting on a long on Bitcoin until we get down here or until we get above here. So I've just completely renewed, I've not redone how I've thought about this, but based on the fact of what we're seeing right here, that's what I'm going to be doing. I'm not going to be putting on any longs. I'm not going to fight this current cycle of the market, which seems to be a magnet down here to support, especially now that we've seen 2 weeks of consolidation. I do expect the expansion period to be quite volatile. So if we have that volatile movement up here to resistance, I'll be putting on shorts. I'll be invalidated if we're able to close the daily above the descending trend line, the 55 daily moving average, and also our horizontal resistance right here at 4102. That's when I'll flip, I'll go long, and I'll be looking for our upside targets of 5,000 and 5,500. Most likely, if we do reach those levels, I'm just going to scale in and readjust my stop loss, because ultimately I'll be targeting 6. But don't have any confirmation of that yet, so hopefully that's clear. And then the other scenario where I will be putting on a long is, again, above here and below here. That's where I'll be putting on longs. Now, if we see more, now I'm not going to set limit orders down here. I'm going to wait to market buy based on what price action does. So if I see an intraday high volatility spike down here below local lows, I'm probably going to market buy. If I see a slow slag down below here with no violent reaction, then I'm likely looking to put on a short. So it's the manner in which we reach those areas. All right, let's roll up through the chat, man. Hey, Quinberry, I'm having a pretty good weekend. Yeah, I spent some time with my older daughter, and we made a fursuit head for her. So it's kind of like a bear bunny hybrid type thing. It looks pretty good. I'm pretty proud of our first attempt. It looks pretty awesome. When's Tron going to stop? I want to get in at a decent price. We'll take a look at Tron. Yeah, Rick Schmitz. So I actually, and I don't know if this is you. Oh, by the way, Vlad P, David, Raybon, and Timothy, thanks so much for the subs on YouTube, guys. Appreciate the support. Welcome to the community. Let me see if I missed anything on Twitch, because I do actually have to have that open. Nope. Okay. So the Gartley harmonic pattern, again, I'm not, that's not my style of trading. I couldn't give you my honest analysis of it because I can only speak to what I'm familiar with. I have a member in the community who has been talking about that recently, I've noticed over the past couple days, and I just can't give my honest opinion of it because I only speak to what I know. Edward Park, I've looked at Hyperwave before. Now, I don't cast shade on anybody, but I don't know any successful traders personally that are profitable using Elliott Wave hypothesis. I mean, all the traders and again, maybe I'm biased, maybe I'm hanging out in the wrong discords, I don't know. But again, I've traded traditional options, I've traded equity, I've traded precious metals, and I don't know anybody that uses Elliott waves on a consistent long-term profitable basis. I mean, just about all the traders that I know who profitably make money use horizontal support and resistance, price action analysis. I know a lot of profitable traders who use Ishimoku and moving averages, like I use moving averages to give me confirmation. But I generally don't take trades based off moving averages unless they give me confirmation of what I'm already seeing in price action. So horizontal support and resistance is the most important thing to me, coupled with price action. How is price moving towards those horizontal supports and resistances? What indications is price giving me as to the volatility of the market or to the direction of the market? Volume is my second thing that I look at. So I look at volume by time to show me the urgency of the markets. What is the urgency of buyers at this particular area? What is the urgency of sellers? And then I look at volume by price. And volume by price gives confirmation to horizontal support and resistance. So it's a secondary indicator. And then I'll use tertiary indicators. My tertiary indicators are the Fisher transform and my moving averages. And then I also use average true range just to give me an idea of where I should generally set my stop loss. And that changes depending on, am I doing a counter trend trade? Am I doing a range trade? Or am I doing a trend following trade? So I'm able to apply all the ways that I look at the market to those different types of strategies. And I use one momentum oscillator, and that is the Fisher transform, which is the most powerful momentum oscillator that I found because it's not just a momentum oscillator. So yeah, Hyperwave. Tyler and Tone Vase. I don't know. I've done a full video on TD Sequential. I used to trade TD Sequential. I don't currently use it on the cryptocurrency markets because I have not found that. Well, let me rephrase that. If you follow the tenets of TD Sequential to a T and look at other externalities, not just buying on nines and selling on nines, if you actually look at your countdowns, your setups, if you look at your aggressives, if you look at your trend setup lines, if you learn to incorporate all of that, and then you incorporate other aspects of Tom DeMark strategies, such as Tom DeMark trend lines, diagonal trend lines. If you look at things like TD Clops and TD Clopwins, which are externalities to the TD sequential system, it's a profitable strategy, but most people, unfortunately, don't follow it very well, and that's why I made the video that I made. So let's see here. But as far as Hyperwave goes, I don't really have too many positive things to say about Elliott Wave analysis. I know a few guys who are pretty smart with it, but I wouldn't consider them extremely successful traders. So just my biased opinion, I have to be honest about that. I don't see a lot of successful Elliott Wave chartists. Mobius 378, hey, thanks for joining us in the chat. What's going on, JC? Jay Solomon says the market is being suppressed on purpose, like silver was for many years. I'm not inclined to disagree with you. But here's the thing. The Forex markets are completely manipulated by 4 or 5 of the biggest banks in the world. Deutsche Bank, Citi, JP Morgan Chase. They run the Forex markets. They determine whether it goes up or it goes down. Now, the banks are not similarly involved in cryptocurrency, but the whales definitely decide where price goes in cryptocurrency. Retail, it's not like you'll see them sometimes in small caps, but more often than not, it's those with big pockets who are moving the markets and not retail traders. They decide if the market goes up or goes down, especially on futures. So what you have to learn to do is just basically learn to not be on the side of consensus. Don't be on the majority opinion. Because as we can see, like when we look at bull bear income, so bulls are quite profitable right here. So the bulls are the cool kids right here, for example, right? So the bulls are the cool kids right here up at 4,000. They're in good profits. And, you know, everybody else wants to pile into this. They see this big, nice, volatile movement up. Retail traders think that they missed the trade. They don't want to miss out on it anymore. So they pile in right here at the very top of a market cycle. When all the indications, if you look beyond, if you look at other indicators such as social sentiment, such as bull bear income, such as longs to shorts ratios, all important things. Market depth ratio, bid ask sum. I mean, you can really. The problem with that is you don't want to paralyze your analysis. You don't want to get analysis paralysis. So you want to just understand what data points are you looking at. So bull bear income, it seems very clear cut for me. I look at that to see if we're forming a local top. If I see longs are very profitable, and then if price action tells me that we're near resistance, price is stalling out, volatility is falling, most likely we're going to see a reversal, probably a good time for me to sell or to sell short. Alternatively, when we see a local bottom, I see the bears are very profitable. I see a lot of indications like we're close to support. We move down on high volatility. Generally a good area for me to be going long or to be buying spot. Jay, so yeah, I'm inclined to agree with you in the long term, but the difference between this price level or what's going on now and what happened in what happened all of 2018 is time. So I don't think that we're there yet in this period of consolidation to have coiled up tightly enough to move down significantly. Now, it can happen. It can. Yes, it can. And I'm prepared for that, as I said. If we see more than an intra wick down below locally lows, if we see like a daily close below or yearly lows or previous yearly lows, then it becomes kind of a different story. But intraday wicks down, times to buy. That's why I said if you do want to be more conservative and less aggressive, instead of looking to market buy that low, which if everything goes to plan is the best place to buy, you wait for a daily close above that level. So you wait for the intraday wick down, you wait for the daily to close on some form of reversal candlestick pattern, a hammer, a dragonfly doji, et cetera, and then you actually wait another day for a bullish candle to print. And then you can be confident of, at least as confident as you can, in a range trade back up to the upside. And then you can also set your stop more conservatively because now you have another bottom to go off of. Levon, Gladys, and Igor, thanks so much for the subs on YouTube, guys. Highly appreciated. All right, let's see here. No volume. Hey, James Glenn, good to see you, man. No volume equals market makers doing their things. I took a position in MPXS a few days ago, and my stop loss in Bitcoin has gone off like 2 or 3 times, creating chaos for me. I'm still up 60 or 70%. Awesome, man. Congratulations. Yeah, not a lot of things. Still, I mean, we have to look at what the chart is. You're absolutely right. Still overall bearish on Bitcoin. But I will be looking for that opportunity trade to the upside if we go down to the level that I want us to go down to. It's all good, man. Thanks so much for the support, man. Thank you for the kind words. Hey, what's going on, Alex? Good to see you in the chat, my good friend. Satoshi Nakafoma, what's going on, brother? Let's see here. Oh, sorry, it just dropped all the way down. Sorry, man. Satoshi Nakafomo says, "Where's my wrench?" Always ready for it. You know, I see you in here often enough, man. I'll give you the chance. You're in there like Flinway, brother. With this down market, will work for wrench and food. Zacardian Drums, thank you, man, for the kind words. Hey, what's going on, Malicious Upload? Good to see you in the chat, brother. Myth says, I'm trying to understand BitMEX order books. There's a $22 million sell at $35.90 that's been sitting there all day. Does it mean anything in terms of making decisions? Who's putting it there? So here's the thing. I've learned, and actually I talked about this. I just did a full comprehensive introduction to BitMEX for the premium subscribers. So that's the latest webinar. So in that video, I do, first off, if you're new to BitMEX, I fully walk you through the trading platform, how to create your account, how to have a secure account, blah, 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 blah. You know, I break down all the order types, and then I go into more detail because really, honestly, in my opinion, there's lots of like tutorials on BitMEX on YouTube, but none of them explain like really, like they're just like, hey man, this is how you market buy, this is how you market sell. You maybe pay a little more for that, but your stop loss, make sure stop loss. Okay, good, 10x leverage. And it's like, what the fuck, dude? Like, what if somebody didn't completely at all understand the way that futures work? What are derivatives? What are the index price? What does it mean, cash settled futures? You physically delivered. I heard that too. What's that? You know, back's going to be physically delivered. Can somebody explain that to me? Does leverage? Should you ignore leverage? Should you ignore ROE? What's cross margin? How does that work? How do you calculate risk? How do you input leverage into that? How do you calculate everything? Do you pay a fee for stop orders? You know, what kind of stop limit should I use? How do I get a trailing stop? You know, I'm trying to do a long and it just won't let me set the sell stop for my trailing stop. Hint, put a negative in front of your value. Just all these things. None of them talk about using futures contracts for regular futures trading. None of them talk about how you can hedge your spot price. None of them talk about, settlement upon expiration. None of them talk about TWAP, time weighted average price. I mean, come on, dude. None of them talk about trading backwardation and contango. I mean, there's so much stuff. So from somebody who's traded regular futures and derivatives, it's just, so there's such a lack in the space, man. So worked on that. That video is about 2 hours long. So I was up till about 4 o'clock in the morning of the night making it, man. So, oh, jeez. So in the context of your question, BitMEX order book. With Bitcoin, especially on BitMEX, you're going to see a lot of order spoofing, but you can't know if it's spoofing or not until it happens. So honestly, the order book on BitMEX, I take that off. I'm not an order flow analysis trader, like absolutely not 1,000,000% at all. No, not on Bitcoin. You can kind of do that on Forex. You can definitely do it on regular stocks, but it's just. Lost my train of thought. Yeah, but for Bitcoin, especially on BitMEX, you pretty much want to ignore the order book because, I mean, my first thought is that it's spoofing. Somebody's putting a sell wall on there to suppress price. Doesn't mean it, and again, you can't really tell until they start letting it get chewed into. Do they let it get chewed into significantly? It's just not a consistent strategy to trade. I know some traders that trade order flow analysis. They do quite well for themselves. It's just never an avenue that I've gone down. So generally, I ignore stuff like that. Malicious Upload wants me to check MDA. Absolutely, man. I will look at everything you want me to look at, especially because you threw BNB my way. Good looking out. Pi Lai says, can you define what time frame is slow? 4-hour chart, 30-minute chart. I know that's a big variation in difference, but you're going to see more clearly on those lower time frames. So anything below your 4, so you're waiting for the 4-hour to close up out of that area, and you're really looking for that 30-minute chart to see a real huge wick down, and then you want to start to see that wick come back up. You're going to see that on the 30-minute chart. Chat roll up. And Daniel wants me to look at XLM. Okay. And he says, holy F, Justin, you have 100+ viewers on Twitch, man. Congrats on the growth. Thank you so much, dude. It's all good. Kappa HD, bro. How much do you need to trade in order to be able to make more than minimum wage, bankroll wise? That's a good question. So I'm going to answer that, and then I'm going to go look at MDA and XLM. So my personal recommendation is that full-time trading. So the most profit that I make is from swing trading. It's not necessarily day trading, scalping. You're taught that if you sit in front of the charts for 8 hours a day and you day trade, you're going to make more money. That's generally not the way it works. The way that it works for me, anyways, in my experience, since I've been trading for quite a while, is that I'll take a lot of small losses, and then I'll have big winners. And when I catch those movements, when I catch that nice trend trading winner, when I've got in at a really great price, instead of taking profits, I'll generally scale in as the trend continues to develop. So I'm always scaling in with a smaller position size, and then I'm adjusting my stop loss. So I'm locking in profits from previous positions, and increasing my position size as we continue to move forward. A lot of variations on this is called pyramiding up. It's one of the most successful strategies that I've ever studied, come across with, applied daily in my life. But honestly, you're going to be able, here's the problem. And again, I don't know if you're asking from this perspective or from this lens, but when you're looking to make a living off of trading, it's generally better to continue to work another job. And the reason why that is because then you won't have to pull your trading income to cover your daily expenses. Okay. So what you can do to cover your daily expenses, you can generally, my recommendation, it's a pretty stressful life that I live. So I do have the convenience of being able to work from home, being able to spend more time with my family, spend more time with my daughters. It's a good lifestyle, but it's a lot of stress. It's a lot of stress. It's a lot of watching the markets. I'm not going to lie. Anybody who tells you that trading is not a emotional occupation is lying. It gets better with time, but still, the job is still the same. So it's not so much, your question, it depends on your living expenses. It depends on it. But the way I look at it is this: if you are growing your bankroll by, let's say, 20% a year, which I think is possible with a good strategy. If you're growing your bankroll by 20% a year, so let's say you have a $50,000 bankroll. So you're growing 20% a year. Let's do some math here. So if you're able to apply $10,000 on the first year, for example, now you have $60,000. Now you're growing that 20%. If you're able to consistently lock in, if you're consistently able to grow your account, then it's going to grow exponentially over time because you're going to be able to take on larger position sizes. It's just like treating your bankroll like a poker roll. So once you amass more capital, you go sit at a larger table. If you continue to do this and take a 20-year window out, so say you want to start trading now and you want to be done in 20 years. Well, if you want to make trading your full-time job, that's absolutely fine. Just understand that that's a little bit of a different lens. If you want to look at trading as a form of income to supplement what you're already doing as your passion for life, because very few people actually find trading to be their, like, I'm passionate about trading, I just love it, I love the thrill. Most people just look at it as gambling when it really comes down to it. Most people that try to take the jump off and try to trade full-time, and again, I don't just trade. I run a full community. I do webinars. I speak at events. I travel around. I coordinate. I coordinate investors for mining, for example. I do different projects, right? So all my income does not come directly from trading, and because it doesn't, I'm able to look at my capital, at my portfolio, as non-pull-outable money. So it just continues to grow. And the longer that I let it sit and grow, the longer that I add to my trading portfolio balance, the longer that I increase my capital, the larger that it grows over time. But if you start out with a $50,000 bankroll and you're pulling your profits to cover your living expenses, well, you're always gonna be stuck with your initial capital. Your capital's not gonna grow, right? But if you're able to grow, if you start off with $50,000 in 20 years, you could have $2-3 million. Those aren't insane numbers, guys. Those aren't insane numbers. A disciplined trading strategy, patiently trading, looking for big winners, cutting losses small, having small losers, and then occasionally big winners, and then not taking the money out of your trading portfolio will allow that to grow exponentially. Just compounding interest. It's the exact same philosophy, compounding interest. So that's my general recommendation for people to approach trading. So, how much do you need to trade in order to be able to make more than minimum wage? Well, let's say you're starting out with, um, $50,000. Okay, you only want to lose 3%. You only want to lose, again, if you're starting out in trading, I recommend 1%. But if you're a little bit more experienced and you know what you do, generally I recommend that you only allow yourself to lose 3% per trade. So if you're losing 3% per trade, you're only allowing yourself to lose $1,500 per trade. And then you're looking for a risk to reward greater than that. So if you win 2-to-1 or 3-to-1 or 4-to-1 or whatever your metrics are. And if you lose, you only lose one. Now, if you backtest and create a profitable trading strategy, then over time you will be able to grow your portfolio into something that will help you retire with, or at least allow you, when you're in your 40s, when you're in your 50s, to retire and do what you want to do, as well as live a lifestyle that you want to do now. Okay? Because you have other sources of income. You're not reliant on just your capital portfolio to be actually able to enjoy life. So if that isn't working out for you, like, for example, if your full-time job or your part-time job, for example. So a lot of people, like, the best way to live, in my opinion, is to trade part-time and to work part-time. So now you're covering your expenses. You're able to profitably trade. You're making a plan for the future. You have a nest egg that you can pull on in times of crisis. It's not like you just absolutely can't take money out of your portfolio. Just understand that when you do so, it's like pulling money out of your 401k. The more money in your 401k, the more rapidly it's going to grow. So that's always been my approach to trading. I do trade full-time as a trader, but it's not my only source of income. And I think that's what helps me not pull money out of my trading portfolio and just allow it to grow and grow and grow and grow and grow and grow, and allows me to live the lifestyle that I want to live, because I have income from other sources. I don't have to pull money out of my portfolio to cover my cost of living, to cover my rent, payments on my house, anything like that, right? My cell phone bill, my daughter's medical bills, anything like that. I have side income. I have side income that provides for all my needs. And if your side income isn't good enough, then that's a completely different story. And you need to look at, are you doing something that's in high demand? Do you need to go back to school? Do you need to become an entrepreneur? So I always tell everybody, you should try to be an entrepreneur. It's the best thing. Find something that you can do that's valuable. Find a way to sell it to people, and just do that and grind hard. Just grind everything into the dust, because it beats working for somebody. I would go crazy if I had to punch a time clock. Absolutely insane. Whack-a-noodle insane. Morgan Freegan and One Crazy Hippie, thanks so much for the subs on YouTube, guys. Assume I watch a lot of live streams and make a good profit. Yeah, Smick Money. Yeah, I know Crown. I don't watch his shows, but I'm aware of who he is. Yeah, his TA's fine. Would you say only market buy during high volatility moves or combine with limit orders? So when I see high volatility, I like to capitalize with market orders, right? If we're at a key level of support or resistance. If I see, in general, if I see price kind of in the middle, so low volatility or whatever, moving down to a key level, then I'll be looking to set limit orders. And the nature of how the market is moving down to the level will determine: am I going to go long from here, or am I going to short? Am I going to go short from here? And when something's, limit orders are also great if something's range bound, man. If something's range bound and you're coming up on support, you put a limit order there. If everything in your analysis is congruent. At the end of the day, you got to take chances with trading. You never know if something's going to go in your favor. You just look to take the highest probability setups. But yeah, actually, as a trader, I do market buy a lot. I know that people are like, you're going to get eaten up in fees. Well, yeah, that might be true, but the way I trade, again, I use limit orders too. It's not like I always market buy. It's just different for every scenario. But the way that I enter a trade is generally not different in every scenario, or the setup that I need to see. Yeah, you can always buy at the price if, yeah, that's a very good, that's a good point too, Alex. Yeah, Alex, again, I'm not like every other trader, but Alex makes a good point. You can always look to capitalize on high volatility movements with market orders, and then use your limit orders for more strategic places to sell. JP Morgan said Bitcoin's going to 1260, and that's exactly why I don't think it's going to go down there. Thelonious, I will allow that. Hey, thanks so much, Malicious. I really appreciate that, man. And Myth, we'd be glad to have you, man. I can't wait to see you in there. Yeah, sorry. So XLM. Yeah, XLM and MDA and TRX I'll look at. Yeah, Alex, hey, Alex dropping some serious knowledge in the chat here, guys. He says, keep in mind, trend following strategies make great profits, but only have a win rate of around 20%. You got to follow the system religiously, because if you miss those winning trades, the system is worthless, because 80% of the trades are losers. The winners are just out of this world profits that make up for the losses and put you in the green. Absolutely correct, man. Lots of small losses, big ass winners. Whoa, we got Pablo Escobar in the group, man. Anything you need, I've got you. Thanks for the sub, man. Yep, that's right, Ron Legato. Hey, you got that right, man. That is the 80-20 principle. Myth says more like $500 for me. You know, you can make it work, man. That's one of the things that I was trying to talk about. If $500 is your bankroll, then make that profitable. Make that system work for you. The problem most people make is that if they have a smaller capital, they treat that smaller capital like they have a larger capital. So they have $500 in a trade, and they think in their mind, I'm not going to make any money putting $20 into a trade, which you can kind of do on cryptocurrency. But if you're new, that's exactly what you need to do. You need to treat your money like a poker roll. So if you have a small roll, you're sitting at this low limits table. It's just the way it is. And then when you get a windfall in life, assuming that you're managing other aspects of your life correctly, that you're making potentially good investments in other avenues, or that you're hustling really hard, or you've got some good side income, or maybe you get a windfall, then that's when you're like, oh my God, I had this $500 over here and I was able to grow it into $2,000 over 2 years. Look at this. I just got 15 grand. Because now you know how to grow that 15 grand into 150 grand. And honestly, ladies and gentlemen, that's life-changing money for most people. You got to think long-term, 20 years out, not 2 years out. All right, let's go to the charts, guys, because we've just been sitting here on bull bear income for a while. MDA is the first thing we'll check out. MDA BTC, right, brother? Or no, did you say USDT? Let me roll up here. MDA BTC daily, yep. I see what you're looking at, my dude. I know you'd be looking at this trend line. Nice. Very nice. So yes, MDA did just break the descending trend line on the daily. And here's another thing that I like about this as well. If we actually look at the nature of how we broke this trend line, if we look at the daily chart here, we see a very nice steady progression of higher, again, it's not super significant, but we have this kind of lazy drift down. We have this lazy drift down and find a bottom. And then we move up to resistance on low volatility, right? And then the actual breakthrough is volatile. It is. But this isn't blow off top. This isn't blow off top type stuff. So actually, if we go look at volume, yeah, nice steady volume. Nothing like, really nothing like, look at this candle right here. where we have a reversal candle at the top of an uptrend on high volume, and even more noticeable right here. So we have an upwards movement moving on. I mean, there's just no pause in this. Do you see the difference between this movement right here, where you're just up, 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 straight up all the way to the top, and then at the very top you get this blow off top right here, this blow off top right here, and even more significant right here. So here's the true blow off top. This was the lead up to the blow off top. So honestly, guys, when you see stuff like this, when you see candles like this, where prices just shot up on high volatility, without taking any pause for a nice healthy retracement for a higher move upwards, you need to be doing your selling, or it's statistically more likely a great area for you to sell. Now, don't get salty if you sell here and then price runs up here another little bit. I mean, the odds that you are going to pinpoint capture that best area is just not realistic. Again, you got to look at your best case scenario. Again, look what you see here. You see price falling down on low volatility. Then we put in a double bottom. I mean, so whatever metrics that you're using, you find support right here on your 100 simple, or excuse me, actually your 200 simple. You've got lots of opportunities to enter. You can set limit orders for key areas of support and resistance. It would take me some time to chart this all out. But yeah, look, we've got previous resistance right here. Price finds support right there. Also congruent with your big moving averages right there. You've got your 100 coming in right there. Your 100 simple. You've got your 200 exponential coming in there. Yeah, a lot of kind of no-brainer stuff there. Now, it doesn't mean you put the trade on. But what I want to point out is the difference, price contraction right here. You know that what follows price contraction is expansion. And you don't see this blow off top as you're coming to resistance. So instead, you see a nice, healthy, higher low volatility movement upwards. And that's generally a sign that the market wants to break out. That's actually a sign of strength. When you see low volatility approaching a resistance line, and what I more specifically mean by that is just a good, nice, healthy movement up there. Nice pullback for support, good, healthy consolidation right here after a down move, and then price comes up to resistance and breaks above it. Yep. So I quite like this. So what are we looking for here? Where are we watching? Well, let's pull out our line chart. And we see this is our closest area of real resistance and also an HVN right there in that area. So I kind of like that level right there. Now I'm going to pull that down just a little bit. Just so I can hit the bottom of that HVN as well. Yeah, and we do have this LVN right here. So what does price like to do through LVNs? It likes to trade right through them.
It's over 9,000!
Colin Pateman. Hey, thanks so much for the sub on YouTube, man. So good catch, dude. Yep, good catch. Nice low volatility movement to resistance. Nice low volatility movement to resistance, and then a nice breakout. Yeah. So how do you manage risk? Generally, you manage risk by setting your stop loss at the low or the open of the candle that broke resistance. So anywhere right around here, anywhere right around 19,693 or 2022. Because if we're seeing a genuine breakout of the trend, then we also have to look at other take profit targets as well. So we've got the first obvious take profit target. We've got this HVN right here, a lot of consolidation here. But ultimately, I mean, traditionally, the way that you look to do this is when you've broken a downwards trend, you just look to ride the trend, guys. So you look at previous resistances right here. And again, on the daily, we're now above all our moving averages. So we don't have anything overhead to target except for previous resistance. So actually target this one right here. Let's look back in the past. Yeah, let's look back in the past. So we've got this level right here. Price stops here. Price stops here. That's a double tap on resistance. So I like that area right there. We've got this equal top right here, obviously resistance. And then we've got obviously the range high. All right, so if we're going to see a nice, genuine, good momentum move, I mean, the way that I would trade this is that you can either look to take profits at each of these levels, or the better, more profitable way in my experience is that if we're going to see a real nice big move out of MDA here, is to actually scale at each of these positions and adjust your stop loss as you go up. So what did I say? Another way to set this is to use average true range. We have average true range at 1347. So let's pull out the calculator and do a little bit of math. What was that? Sorry. Quadruple zero. Not. 1347. What the hell is that? Get this thing on my keyboard. Weird. Times 3. Quadruple zero 4041. Current price being 000 2900. 219 minus 4041. 000 17859. That put your stop way down here. I don't know if I really like that. So that's 3 ATR on the daily. So instead of doing that, which seems an unacceptable level of risk, let's go down to the 4-hour chart. That's going to give us, yeah, because we're setting up our trade on the hourly chart, moving down to the 4-hour to execute. Let's see here. So current price, or current ATR is 1, 2, 3, 4, 5, 571 times 3. Okay. So we get quadruple zero 1713. Okay, that's better. That seems better to me. So we've got 000 21899 minus 1234 1713. 000 20 186. Horizontal. Whoa, whoops, horizontal line. 000 20186. Boom. And pink for stop loss. And there we have it. There's the trade setup, guys. Now you can go in right now. It's an acceptable way to take a breakout. You've already looked. What I do like about this too is that if you look at the lower time frames, you attempt to have that blow off top on the 4-hour time frame. You pull back, test your 8-hour, 4-hour exponential, or excuse me, your 8-period 4-hour exponential moving average, which is also pretty much a retest of your resistance line right here. So you break above, pull back and test, and up. See, I quite like this. So is the R to R appropriate? Say you market bot right now. 24167. 24167, and your stop loss is 2186. It's about a 1.5 for your first take profit target. It's in that realm of acceptability. And obviously we can see that it's quite worth it for the second take profit target. 27272. Yeah, there we go. That's a 3.46. And again, you can see that this multiplies, this magnifies as we go higher. So generally, when I do see a nice movement like this, we've had this long period of consolidation, man. Looks like MDA hasn't really done anything since the beginning of December. I do want to look at this. I want to look at vcdepth.io for MDA. Interesting. So here's the weekly MDA. Let's look at the 6-month market depth ratio. Okay, so this is kind of what I want to see here. It's not the best thing that I'd want to see. It's really all over the place. So what this is representing is the ratio of limit orders or limit buys and limit offers on the books. Typically, when you see limit bids higher than limit asks, then you're going to expect bullish momentum, bullish movement. And conversely, when you see more asks than offers, or excuse me, more asks than bids, price is likely to move down. Now, we do see a drop off in limit bid orders right now, and a little bit of a pickup in limit sells right here. And a little bit of a local drop in selling. So this does give us a little bit of a bearish bias looking at the fundamentals of MDA. Let me see if I can. Yeah, I mean, it's just pretty clear what it's telling you. Now, it doesn't mean that you have to trade off of this. Again, we're talking about cryptocurrency. You can see a lot of spoofing on the order books. And if price is genuinely doing a breakout, you can see an increase. You know, it makes sense, like, because now you've got a lot of people that want to sell at higher prices. So this can generally also mean that you have traders that are putting in their limit orders for their take profit levels, or that you have people spoofing the order book up. So they're putting up sell walls. They're taking sell walls off. They're putting up sell walls. So as you can see here, there's a pretty steep sell wall that really peaks here at about 86 cents. But again, doesn't mean that you have to go solely based off that either. I still like the setup. I still think it's good. I still think it's good for at least that first take profit target right there. Just make sure that you guys, again, not recommending the trade. I don't do that. You guys do your own analysis. If you don't like it, if you think I'm completely stupid, you're free to think so, guys. Okay, going all the way down. I typed the wrong stop loss. No, it's 000-20186. Nope, I did not. 000-20186. Yeah, that's true, man. Alex, you hit the nail on the head. What if you had to, though? You would need to make $10,000 a month in profit and also grow the fund. So with 10% profit, you would need $11,000 bankroll. I mean, listen, you know how I, started trading full time? I ate a lot of ramen, man. I was young, didn't have kids, I wasn't committed to anything, so it was easy for me to just accept that risk, and I was lucky enough to not have gotten the windfall that I got to start me in trading when I started trading. So I started with a small amount. I learned how to manage my money. I made a lot of mistakes for a while. I made all the mistakes in the books and then invented some. And then I stopped. I stopped making mistakes. I learned to actually be disciplined, to take my feelings out of the trade, to just look at the technicals, to take no-brainer setups, in my opinion, to manage my risk, and to do the same thing every single trade. Especially with regards now, I will sometimes, I don't want to say play fast and loose, but I sometimes will take setups that don't conform to 1,000,000% strategy. But what never changes is I would say that 80% of my trades are always the same based off the same metrics, which is returns to horizontal support or resistance or shorts from resistance, depending on volatility. And things that I look for to give me confluence on the higher probability of that setup is the Fisher transform. Are we overbought? Are we oversold? What's the volume profile telling me? Where are my moving averages? All those things just look to add confluence to my horizontal support and resistance levels. Pretty much it's 100%. So it's 89.9% horizontal support and resistance. It's all you need, man. And an understanding of price action to go along with that. So key levels and what is price doing around those levels. Should be okay. Sorry, guys. I was just looking at something. I don't have any thoughts on Tron Bet. I don't know anything about it. I'm sorry. Hey, what's going on, Rick? Hey, Quinn. Well, thank you for your service, man. Seriously, I got a lot of respect for anybody in the armed forces. And yeah, Alex hit the nail on the head, man. Feel free to stop by the Discord, man. It's all about the community. We'd be happy to point you in the right direction. All right, so I got to scroll down, Ran. Hey, Eli back. Thanks so much for the $5 tip, man. Highly appreciated. My weekend's going awesome, man. How about you, dude? Glad to see you in the chat again, man. Again, you're one of the good ones, brother. As I said, me and my daughter made that fursuit last night. Oh, actually, you know what I need to do? Sorry, I need to do this right now. Hayden, man, teamwork makes the dream work, baby. All right. Sorry, guys. Let's see here. No, James, I was just responding to somebody else. I've never served in the armed forces. I was just responding to somebody else. Yeah, a lot of stuff, man. A lot of stuff. Ooh, you about to throw down some poker, man? You know, that's how I got started in the whole gambling, rambling, trading sphere, man. One of my best friends is a professional poker player. He's really good. Oh yeah, by the way, somebody asked about, I just saw that. Yeah, Binance fees are the same. 0.1 for maker taker, unless you got VIP. If you have a VIP account, which you have to do verification for and then have the funds that are required for a VIP account. So secondary verification and then also more money. You pay lower fees as you go up. All right, so let's look at a few of these now that we've got a nice MDR trade that's just pumping. Pump it to the limit. Go, baby. Go. A couple other things I was doing with those clicks. All right, let's go to XLM is what I said I'd look at. XLM. And just as I said, let's go to the daily. Yep, so just as I said yesterday when I took a look at XLM, I said, I mean, you just got to look at the reality of this. So my analysis from yesterday has not changed. If we look at what we got going on now, we're getting that nice volatile movement downwards at the bottom of a downtrend, which is generally the best time to buy. However, what concerns me is that this has the potential at least to go a little bit further, okay? So yes, generally, if this is going to be the bottom, generally the most attractive place to buy. As you can see, we're falling on low volatility below support. And then we reach the proximity of previous more significant support right here. And we put in a big spike in volume. So this is generally oversold volume in my analysis. But what does concern me is the volatility of past wicks. Okay, and we're down in this area where we could see that same thing. So I'm still tentative, guys. I'm still tentative on XLM. It does look nice, but really what I do want to see is I'd like to see price get back above. If this is the bottom, then I'd like to see price get a daily close above the 8, more preferably for me the 21. However, if we go ahead and close the daily above the 8, then I don't see a problem with taking a trade up here to these two HVNs at 2965, and then this HVN is going to be coming right around 3061. Also got confluence with your 55 daily exponential moving average right there. But yeah, everything overall still bearish, so we're not in the trend trade yet. We won't be in that trend trade really until price is able to break above this range right here and above the 55 at least. That's kind of my first qualification for taking a trend trade. Nice daily close above the 55 and local resistance. And it's okay being that conservative. It really is, because the opportunity is pretty staggering here on XLM. Still we've got upside. We've got upside take profit targets, 3725, 3871, 4297, and I want to get up here to 4297 before we start talking about some of these higher targets as well. But yeah, I mean, overall, pretty much a range-bound market for XLM. Honestly, if you compare it to everything else, XLM has held up super well compared to everything else, and now we're coming back down to a nice, attractive price. And although, if this bottoms out right here, this is generally what you're going to see, a nice big high volatility spike down here, but I just don't know if it's going to do what I want it to do. So I either want to see that in closer proximity down here. I'd like to see it down here, or at least a wick down to these lower areas. Or again, if this is the bottom, I'm going to go ahead and be a little bit more conservative with XLM and wait for that daily close where our moving averages are. Our 8's coming in right now. Oh shoot, it's not going to show on these low Satoshi coins. Our 8's coming in right now around that 2759. So let's just call it 2800. If we get a daily close above 2800, then I'll be looking to take a buy. Then. More ideally, if we can get back up here above 2965, it'd be even better. So at that point, there'd be a scalp opportunity on the table for about a 3 to 4% trade up here to the 55 in this HVN. And then if we're able to get above that, in the 55, then I just scale up and look to hit these other profit targets up here. So nothing really changed on XLM. I pretty much do XLM every day. Getting close, but I'm not sold yet. Not exactly what I want to see. Not the shining pivotal example of oversold volume, absolute best place to enter, because those look something like this. Those look something like that generally. Shit. What was the other one people wanted? TRX. All right, so TRX right now coming up to the area where I do want to be exiting my short trade. So net short on TRX, and for good reasons. Again, we have this nice volatile spike up here, and we're coming back up to resistance. Looking at the Fisher on the daily time frame, very overbought Fisher on the daily time frame. And just in that proximity to resistance right here. Now, if we're able to get above this level, then I'm going to wait and be more patient until we get up to this level to take that. All right. But it does seem like a good area for us to come down. I know that I'm counter trend trading this one. Very well aware. But the reality of the situation is I can't change my initial analysis that this seems very toppy to me. We're coming up on resistance on some pretty high momentum. Haven't had any healthy pullback here to show me that we're actually going to break resistance. It just doesn't look like a traditional resistance break. Now, what we could potentially see here is an SFP. So I'm not, again, this is just my analysis this is my spot analysis. Obviously, I can't take this trade on spot. So my futures position has a slightly different stop loss that is slightly above this and is designed via ATR to be able to tamp out the possibility of an SFP. Now, that doesn't mean that the market goes up there on that high level of volatility the same way. But until we get that daily above this level and actually take out my SL right here, I'm still going to be taking this to the short. So still currently underwater on this just a little bit. But I'm confident in this trade. I'm definitely going to take it. So my my trade setup is to take this to the short side right now, back down to previous support, down in this level. TRX looks topped out to me. We put in this nice double top pattern right here, price sputtering out as we move up. And so unless it can prove this to me by actually getting a daily close above this high, and then I'm going to go ahead and still consider this a good short opportunity right now here up at the top. Get this nice. Now, this isn't the most perfect reversal candle that I'd like to see, but I'd take it. I'd like to see this on higher volatility like right here. Like this is a beautiful short entry. So again, I don't babysit positions. I don't actively manage. 9 times out of 10, I won't actively manage a position because I've done my analysis. And if I actively try to manage a position, there's the danger that my emotions will change how I feel about the trade. So leaving the trade exactly how it is, I see no reason to exit it. In fact, I'm getting the exact reaction off that level that I expected to get off of it. And we'll just wait here and see. See how price responds to the 8 right here. We'll see how price responds basically to this resistance. I expect to pull back here, and really the key level for me is this going to turn into a short-term scalp, or is this going to turn into my long position where I'm looking to scale in all my profits? Is how does price respond right here to previous resistance in the top of the local HVN? Does this just become a 5% movement for me? Does this just become a 5% trade for me on futures, which is fine, which is a great movement? Or does this turn into a nice life-changing trade where I'm scaling in? Really, I'll be able to tell right here when we come back down to previous resistance. Does this hold as support? Does this hold as support? Or does this continue to break through to the downside? How much did I pay in taxes? Not going to talk about that, man. It's between me and my accountant, bro. No offense. But I did pay my taxes. I've paid my taxes every year. See, a lot of people who lost a lot of money don't want to pay their taxes. They don't understand, like, you can shift capital losses into the future. That's, I don't know. Just get an accountant, guys. They're specialists in this. In fact, I'm going to be bringing on the show in the future somebody who specializes in cryptocurrency taxation, and ideally we'll be providing that reference as well for the subscribers as well. Buy ETH or not, I'm not going to do anything with Ethereum or Bitcoin at this level. Holochain, yeah, I mean, here's the thing, man. Yeah, it could go up for sure, it could do, but yeah, if you bought in right now, you'd be a dum-dum. Just, you know, if you miss the opportunity, you do not chase parabolic movements. You do not chase parabolic movements, because when you want to start chasing a parabolic movement is exactly the time when the market's going to reverse. It's generally the exact wrong time to be entering into the markets.
It's over 9,000!
Mr. Glukespringer, hey, thanks so much, bro. Yeah, Eli, for sure, man. Yeah, hey, Smikmani, if you roll back again, I'm sorry. I always start off every day with Bitcoin. So when the video is done, I'll be off here in a few minutes. But if you want to go back to the beginning of the video, I do a full analysis of Bitcoin and what I'm looking to take, where it needs to go for me to take a position, and how I'm handling it. Yeah, Gus Vega, I did a full analysis of MDA live on. In fact, I made a trade live. MDA. I threw that signal to the subscribers. That's what I was doing with my typing. Market bot. So, and I want to give, thank you so much. Hey, malicious upload. Thank you so much. Yeah, Ivan X. I don't know anything about Tronbet, man. I don't know anything about Anti. Go, 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 go. Go, 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 go. Oh, sorry, man. Yeah, if you roll back, but here it is. Here's MDA right here. Market bot right at 21776. First take profit target 24,167. Second take profit target 27,272. Stop loss at 2186. Once we hit take profit 1, initiate a trailing stop. I use 3 commas for that. Initiate a trailing stop. So what's my original? What was my original risk? Original risk. Oh, sorry, I can just click right here. 7.20%. So once we hit take profit 1, either you can take profit or you can do what I do, which is scale in. So let's say you bought $1,000 right here. Right here, you're going to buy another $500. So now you have $1,500 and you readjust your risk. So 7.20 from here. You'd put your stop loss right here. Okay. So 22422. So worst thing that happens is you have a slightly profitable trade because you've locked in or a slightly small loser, right, at this trade, if that happens. Or ultimately you break even. Depends on how you adjust these. You can adjust all of these levels. But if you pyramid up, by the time you hit take profit 2, you're going to be packing a more powerful punch, and you'll have locked in the initial capital to take profit 2, and you'll have locked in the capital at take profit 1 to take profit 2. And then when you hit take profit 2, you would readjust your stop, buy $300, for example, and then you can just continue to ride that up because we do have a third take profit target up here. So that is how you can actually catch a nice, beautiful trade and turn that into a huge, life-changing winner. Or you can just ladder out. It's fine. It's fine. But overall, if you follow the same strategy with profit taking, if you ladder up, if you scale into a position, even though you're going to have more losers, more break-evens, when you do have a winner, the profit's going to be exponential compared to the size of the punch that you're packing. Yep, so weekly just closed. We talked about that earlier. Yeah, a big old Darth Maul of nothing. Yeah. Yep, not looking at taking any positions on Bitcoin until we come back up here, at which case I'll short above this level, I'll go long. And ultimately, if price moves down on high volatility to these levels right here, 33.90, 32.90, 32.93, or 32.39, sorry, I'll look to market buy. But otherwise, I'm just going to wait for the opportunity cost right here. I'm going to look to market buy on an intraday stab down below the previous yearly low. And then I'll be looking to target resistance. Other than that, I'm just looking for opportunities to put on shorts or waiting for the range to break. But unless we break the range on a daily close below yearly lows, then I'm still going to be looking to go long off that because there's so much liquidity there. It's the second test of support. It's a no-brainer long. Hey, no problem, guys. Thanks for the support, brother. All right, MDA doing well. Let's, yeah, XMR USD, sure, no problem, man. Let's go check out. The boring week ended finally. Yeah, it's not over yet though. Yeah, so Monero on the daily looks pretty nice to me actually. Let's go take a nice look in here and see actually what we're doing. Yeah, see, I like this. Coming up to resistance on low volatility, on low volume. And that nice, that nice higher low, higher low, higher high kind of pattern right here. This does kind of look like we want to break out here. Yeah, XMR is ready, man. Nice price contraction on low volume. Slight tilt upwards coming up to that first level of resistance at 21. And look where we're having daily candle closes, Look, we're having daily candle closes. We have a higher daily close right here above our wick range, above our resistance range right here. So now, I mean, we're flirting with breaking out of the HVN right here. And we're coming up on our 21 on the daily, which is our first level of resistance right there. Let's scroll back in time a little bit. Yep. Previous support level right here. Looking at breaking above the point of control, which is right here. Point of control coming in right around $46 and 131. I mean, this seems like a good trade, man. Seems like a good setup. I hate to get rid of that. So first take profit target's going to be up here. Well, let's see here. So we've got a couple different ones. We've got a short scalp target right here, $49.11. We've got this baby right here. And then ultimately right here. This is the range right here. So this is the range. We're at the bottom of the range, looking to go along to the top of the range, guys. And these are your scale in areas right here. Your ultimate take profit target right here in the range between $54 and $57. Or you can use these as take profit targets as well. It's totally fine. And where are we going to be setting our stop? We're going to go down to the 4-hour chart. I like what I see on the 4-hour chart as well. So I'm not on Finex, so you can put this on XMR BTC on Binance, for example. So ATR 72 cents. So 72 times 3. $2.16. 46,920. 46.92 minus 216. 44.76. Let's just do take profit 2, 51.72. See if the R is there, 44.76. Yeah, sure it is. R is definitely there. There you go. Yeah, I quite like this. Yeah, if we look at the 4-hour chart too, getting that nice close above the 100 and the 100 simple and the 100 exponential as well. You got those 200s coming in on the 4-hour right at your first take profit target as well. But yeah, just definitely looking to scale up right there. Just looking to scale and look for your take profit too. If this works as if this works as planned, because that's what I'm interested in. I'm interested in those life-changing trades. Yep, seems good to me. Four-hour Fisher crossing above the neutral zone. Daily Fisher bottoming above zero. Very nice. Not overbought whatsoever. Very good. And that positive growth aspect, or positive wave cycle right there. Yeah, nice double bottom. Yeah, a lot of good things about this, man. Let's slide this over to XMR USDT. Nah, I'm not going to play on Bittrex, man. XMR BTC. I'll take the Bitcoin trade, although I don't want to, man. I do want to. This is an older chart. Let's just get rid of all this crap. There we go. Maybe I will have to go over to, I don't really want to take the Monero Bitcoin pairing. Maybe I will have to go throw some funds on Bittrex to do this one. Just like, had a big winner. What was it? Last month we traded Verge USDT on Bittrex. That was a banger. That was like a 27% trade. I don't like trading on Bittrex. I really detest their platform, honestly. And their support is kind of shitty too, honestly, but it is what it is. It's okay. Above the point of control. Yeah, I'm not going to lie. XMR USD on Finex has the best looking chart for this. So you can apply that. You can apply that anywhere. Honestly, I'll probably just port the same metrics over to Bittrex. I have to talk with my I got to talk with my trading partner and see if this is a trade we want to put on for the group. I'll let him take his analysis of it. But yeah, this is how I do it, because I don't really want to trade the Bitcoin pairing, honestly. I got to fix that. Yeah. Yep, Myth, yes. Yes, I do. I talk about, I teach people how to trade my strategy. I teach people how I approach the charts. We've got the hidden Discord. You get all my setups, take profit, stop loss, justification, chart. Why am I taking this trade? Shitcoin for Bitcoin. What's my take on ZERP? I'll look at ZERP and then AE, and then I got to bounce because I got about 19 minutes. We'll just go over here because I got my eyes on XRP. Yeah, so XRP, I'm just looking for right now at this point in time. So let's look at what we were just saying in the context of everything else. So XRP on the, oh, this is H19. Sorry, I want to look at XRP BTC. So let's look at XRP through the lens of everything that we've been talking about today. All right. So XRP at support, okay, XRP at support in the LVN, which once it closed inside the LVN, it moved down on pretty high volatility. Now, I don't see any reversal signs right here, but based upon where we are, I would, I'd like to see, so I went ahead and closed out my short 2 days ago. So I missed this nice little last dump right here. That's fine. It's cool. It's whatever. When you get an entry, Alex, you got to Alex got us in there at just an amazing price for the XRP short. Anyways, but we're at that low right here. We're at that support level right here. We've got this nice little bump on the HVN right here. So we're coming up pretty much into this supportive area. Now, yeah, there's about 2% to go down. That's absolutely fine. But what I'd like to see right here at this level of support, fish are also pretty oversold, but at this level of support, I'd like to see a bounce for ZERP at this level. I'd like to see a bounce and a retest of these lows in the bottom of the HVN. So somewhere in the realm of like 88.17 on spot. I'd like to see that. And if I see a nice, if it's a volatile movement up, or I get a volatile reaction from that level, and then I'm going to re-enter my short. So basically, I'm looking to re-enter my short at this level. I don't see any indications that that we're going to break up. We really need to get above.
It's over 9,000.
We need to get above like 9,000, 9,011 right here in my analysis for me to be bullish on ZERP again. So until then, as long as this remains, I'm just going to be looking for new opportunities to short, and we'll be looking at these take profit targets, probably looking to scale in. Yeah, we've put in a pretty significant high right here. And just as I was saying, in the context of everything else, when you get very volatile moves down to support, like you can see here, when you get very volatile moves down to support, like here, you get a pretty volatile move down there. When you see that, you're expecting a reversal. But when you just like lazily drift down on like no volatility to support doesn't hold 9 times out of 10, guys. Support falls all the way through. So exited my short yesterday just because we're coming up in that realm where we could see a bounce. So I just wanted to go ahead and lock profits in from that trade. That was like a 9% unleveraged trade. And so I'll just wait for the bounce right here, preferably back up to this like $8,800 level on spot. And then I'll be looking to reopen my short once I get a nice reaction from that level. What's Scott say? Is that beef your life support system? No, it's my phone, dude. Scott, you know that I'm not good with technology, bro. Like, I don't know what it is. Like, instead of like, when it's, I mean, this phone's fantastic, dude. But, by the way, Scott hooks me up with a new phone, so yay. But when I get a notification, it's like I'll get notifications in chunks. So instead of like, beep, hey, you got a text message. I mean, that will happen sometimes. More often than that, it's like, hey, so we like just totally didn't notice your notifications for like 2 hours. And now here's 50 of them. Beep, 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 beep. It's like, come on, dude. How can I live like that? I got the other phone too. So now I got 2 phones, one for alerts and one for the texts. All right, man. Where do y'all buy in the Tether? Binance, man. It's a feature, bro. Shut it down. Oh, man. iPhone Master Race. Stop it. You guys are silly, dude. It's the Galaxy S7. It's pretty nice. It's one of the nicest phones I've had in a while, honestly. Okay, so I got to make a note here to talk to Alex about the XMR trade, or whether we're going to put that on or not. So let me pull open Discord, actually. Where you at? There you are, dude. Yeah. All right. Anyways, guys, what was the last thing that I was going to look at? Sounds like I said I was going to look at XMR and oh yeah, duh. Seems like I said I was going to look at XMR and something else. Well, I looked at ZERP and I looked at XMR. Yeah, hell yeah, James William. Great trade on PoonDX, man. I was just talking about that yesterday. Oh yeah, AE. We'll look at AE, bro. Eternity. Seems like I was looking at this. I must have been looking at this earlier.
It's over 9,000!
All right, let's see here. So remove. Yeah, it just seems like more breakdown, man. Just seems like more breakdown. I need to see a bottom. I mean, we do got a little bit of support right here. Do got a little bit of support right here, but I'd cut that real tight, dude. I'd have that stop super tight, man. Yeah, like here. And I mean, fuck, couldn't even tell you where. I mean, here. Here, I guess at 1024, give or take. But honestly, man, the way that this looks, let's go look at the bars. Yeah, I mean, we're at that 786 fib retracement. And we got a little bit of support right here, man, but we're just back in that consolidation area. So we need to get back above. We need to get back above local resistance right here to put on a trade. Or I need to see a big reversal candle wick down on high momentum. This isn't it. This candle right here, that's not it. So levels that we need to be looking for. This one right here stands out to me, 1187 resistance. You could go up here to the highs, but then you're in LVN territory. So I'd like to do the confluence with the horizontal support and resistance with the HVN. So that's 1180 actually. We get back above 1180, then we're looking for a bullish trade back up here to 1387. Previous resistance, previous top, current local high. Yeah, man. So I don't know. I'm gonna need to see some kind of reversal or consolidation. I mean, obviously we've got support right here. We do have support right here at 991, give or take. But you know, we have that nice big wick down there. So depending on how we come down to this area, you know, if we stab violently down to that 990 area, then I'd probably be looking to market buy. But if we just drift lazily down, then it's probably going to go lower. Probably going to go lower. Yeah, if you take a buy here, I'd probably do this on the hourly chart. Yeah, I'm just not feeling it, man. Slow drift down. I guess hourly is pretty sharp spike, pretty high volatility down in the hourly. I could see it if you're looking at that real short time frame, but because we're looking at that real short time frame, I'm going to keep the risk real short time frame because overall I don't like to look at the daily. 119 times 3, 357. 1090 minus 357. 733. That can't be right. Right, because we've got 1, 2, 3, 4, 5, 119 times 3. So quad, or or Cinco 357. No, not 357. And we've got 1, 2, 3, 1090 minus 1, 2, 3, 4, 5, 357. 10,543. Let's just stop. Let's just stop, bruh. 1054, and then just wait for price to come down here. I mean, you do got, let's go to that daily again. You do got a little bump right there that you could potentially target. That little bump's right here at like 1020, 1031. So you can look for a violent stab down to that level too. But now we've just got too many, there's just too many lines on the chart now. So it's like which lines are important and which lines aren't. Yeah, if you want to take a stab at this right here, I'd keep the stop pretty tight, 1054. You'd be targeting that 1180. Otherwise, I just feel I feel safer just waiting to pay the premium on the breakout of resistance right here. Nice slow grind back up to 1080. Take that buy and target previous resistance right here. Around 1400. Or excuse me, 1380, 1400. I just realized because of the low sats. Sorry. Yeah, I saw, man. Yep, XMR 2X. Okay, yeah, so we can actually take a 2X trade on Kraken for that XMR pairing. All right, bro, we'll look at it here in a little bit. I looked at ZERP, guys. I looked at XRP just like 10, 15 minutes ago. All right, guys, it's 6:53. It's about 2 hours for the show, guys. I'm gonna cut it for that. Let's see here. I want to thank Doug McDonald, Bitcoin Boogie, Modern Online Business, John Balance, and Derek on Fire. Thank you so much for the subscriptions on YouTube, guys. Highly appreciate the support. Keep coming back. And also, Pike, Vice. Thanks for the follow on Twitch. Highly appreciate that, my friend. All right, guys. Announcements. What's going on? What's coming up? And hello, Blockchain Boy. All right, just for you. Super quick. Mr. Ether, I love you, man. You're one of the good ones, bro. But I was just about to bounce out, man. But for you, we'll look at ARK, man. Woo! Looking good on the daily. Looking good on the daily. Yep, that nice pullback. Yep, that nice lower, higher low, higher high kind of pattern right there. Not that huge volatile spike up, coming up to that resistance zone right there. Yeah, I like that, man. I like that quite a bit. Yep. I talked about this with Ethereum. This is exactly what Ethereum looked like. And so, cool. Good trades coming up. Yeah, ARK looks good, man. ARK actually looks quite good. Yep, that nice slow grind up to resistance right here. Tested it here, third test right here. Where's your take profit targets? Let's see if we get some confluence here. Not a lot above us. Well, we've got the range high and the 200 simple coming in right here. That seems like a worthy target to me. And then we've got previous lows right here. Seems like yeah, that seems right to me. Zoom back out. Yep, seems right to me. All right, now let's go to another 4-hour chart to calculate your stop. Yep, got to look at the analysis on the daily. Higher low, consolidation. Seems like we've gathered enough strength to break, and we don't have the blow off top that you would expect to see right here. Blow off top, meaning that the breakout's going to fail. Just didn't have enough steam because look, that was a slow, steady grind back up. Blow off top for buyers, pulled back, formed a higher low instead. Seems like we have enough energy to break through resistance now. Doesn't mean it's going to happen, but when you're just looking for breakout trades, you want to see that. You don't want to take this breakout trade. You want to take that breakout trade. That breakout trade is clear confetti. Anyways, what's ATR? 352. $10.56. Oh shit. Yeah, okay, quad 10.56. $11,344. There's your stop loss. So now we're getting hairy, though, on the risk to reward. Entry price of $12.39. Take profit of $14.18. Stop level tick, $11.29. Is that right? Seems about right. $11.34. Yeah, well, no, it's worth it. That's a 1.7. It's in the acceptable range. 2 to 1 would be better, but anything above 1.55, 1.6 is okay. That's how I used to trade. That's how I used to trade S&P lots. 1.6 risk to reward ratio. There you go, man. I got to talk with Alex, but we might put this one on too. You goddamn right, Boston Vegas. Gotta Watch Crypto says, damn, I was hoping you would say don't touch it. Now I got a FOMO in. Oh, shit. Bitcoin's going to fall to below 3,200 by Thursday this week, mark my words. That would make me extremely happy, bro. Because then that would mean that I'd be doing some buying. I do some trading on Bittrex. It seems as of late that nothing's moving their opinion. Yeah, I don't trade on Bittrex, man. I trade on Binance and MEX. But, I mean, yeah, Alex hit the nail on the head. There's overall low volume in general, man. Ooh, shots fired at Bittrex. Oh, okay, guys, it's 7 o'clock. I got to go. So, traditional show ending, guys. We got some exciting stuff coming up. We're going to be doing, we are going to be doing giveaways for a month of premium. So, we're going to do a giveaway for a free month of access to the premium trading group. Details on this will be coming out this upcoming week. We're also going to be partnering with one of our sponsors. I don't want to say sponsor. It's not a sponsor. That's the completely wrong word. So we don't shill projects on this channel, right? We only talk about, like, when we're not talking about the big caps and stuff like that. Kraken's a great platform, by the way. It's probably one of the best. We don't I don't bring altcoins on here. I don't take money from projects to bring them on the show and talk about how great they are for $5,000. I don't do that. I make more than enough money trading. But there are projects out there. I mean, the crypto community is small, and the good ones, they're the ones that stick around. So I bring projects on the show that I think are interesting, that I think are unique or fundamental, and they've got a great team, guys. We've got a proud partner of the show, Your Crypto Daily, proud partner of the show, X42. So we're actually going to be doing a giveaway. Not going to name the name of the coin yet, but we're going to be doing a giveaway, a pretty big giveaway, guys. We're going to be giving away potentially a couple masternodes worth of coins, okay, for a particular project that is a partner of the show. Let you guys wheedle that information out. We've got a few of them. And we'll be doing that giveaway live on the air upcoming, guys. So information about that will be coming out this week as well. Me and Scott are considering going to the blockchain conference in Chicago this year in March. Haven't figured out if we're going to do that. If we go, we'll probably do some live streaming. But it'd just be nice to go and meet some developers, meet other individuals in the space as well. It'd just be nice to get out and vacay too, you know. We just recently spoke in Wisconsin at the convention to the American Association of Individual Investors. That was great. Scott should have that footage all edited and wrapped up here soon sometime. And otherwise, let's see. Yeah, exciting stuff coming out, man. Exciting stuff. Working on a lot of stuff behind the scenes. So, traditional show ending, guys. If this is your first time to the channel, make sure you hit that subscribe button and give us those thumbs up clicks. We really appreciate it. I do think that this is vital, important information that people who are investing in this space should definitely hear. Otherwise, I wouldn't do the show every day. So it helps people later on down the stream find what they're looking for and get the correct information in front of them. So if you do, please support the show by clicking subscribe, hitting the thumbs up button. And if you want to catch me every day, I'm here every day, hit that notification bell as well. If you want to help support me in doing what I'm doing here, if you find that my information is valuable to you, head on over to twitch.tv/crackingcrypto. Give us a follow and a subscription on there as well. Helps keep the lights on. If you want to keep Scott from eating ramen because he was really getting used to his bologna sandwiches, you guys can head on over to crackingcryptocurrency.com/merch and pick up some t-shirts, caps, ball caps, wallets, watches, whatever. Again, helps us keep the lights on. and helps us do what we do on a daily basis. Last note, if you guys would, if the bear market in 2018 has really got you down, if you feel that you're lacking in fundamental trading ability, if you feel that your strategy is unprofitable, or if you feel that you're not able to emotionally execute your trades, then consider joining us. Consider joining the Kraken Cryptocurrency Premium Trading Group. You will get access to all my trade signals and setups, as well as the other analysts and traders for Kraken Cryptocurrency. You will also get access to our resource database filled with webinars, courses, seminars, workbooks, PDFs, everything to help you supplement your knowledge. You will get access to my webinar series designed to teach you from scratch how to become a profitable trader as well, help you avoid all the mistakes that I learned in the space. You'll also get access to our hidden Discord, our private members room, VIP chat, and the VIP day trading voice chat. On top of that, you get premium curated news, you get one-on-one support, you get mentorship, you get all the wonderful, nice benefits behind the paywall, guys. Consider doing that. If you want, information is at premium.krakencryptocurrency.com, guys. Otherwise, again, I've been Justin Wise, lead analyst and senior mentor here at Kraken Cryptocurrency for another breaking Bitcoin market update. I hope that this live stream has helped crack cryptocurrency for you guys. As always, trade safely, and I'll see you tomorrow. Have a wonderful evening.